Ladies and gentlemen, my name is Greg Michalowski, and this is the end of the day Forex report. Today's date is August 18th. Actually, it's August 19th now. New trading day here in the Forex market. I'd like to be your mentor, your leader, your guide, your trade advisor, all those things wrapped in one. So if you like what you hear in this video, want to learn more, you can always go to my website at GregMikeFX.com. There's an opportunity for you to click in and put in your email address, and I'll stay in touch with you so that you can hear, I can be your voice in the Forex market. What do we do today? We saw the strongest currency pair be the pound sterling trading here today. Why? Because Bank of England's Carney was speaking in the London morning session, spoke yesterday in the London Times, Sunday Times, saying that the Bank of England does not need to see wage inflation to raise rates. So he's being a little bit more hawkish there in those comments, and that forced the pound sterling to the upside. It was the strongest against the Swiss franc, which was the weakest currency today. The Swiss franc lost its value against all the major currency pairs in trading here today. All the major currencies, I should say. The Swiss franc lost value. Why? Because there was less tension out of Ukraine, out of Russia. The weekend did not escalate any more activity from that region, and for those reasons we saw the flight into relative safety of things like bonds, into the relative safety of the Swiss franc, into the relative safety of the yen, start to give back some of those gains. Speaking of the bonds, the bond yield in the U.S. was pushing, the 10-year bond yield was pushing around 230 on Friday. It's back up to 239 in trading here today. The German Bund yield was down below the 1% level, I think about 295 or 0.95 as a matter of fact, maybe even 0.94, and it moved back above the 1% to 101% here today. Still relatively low, and as are all bond yields here, but we are seeing a rebound back to the upside in the yields in most of the major currencies. As far as the stock market goes here today, a rally. Why? Because less tension overseas. We saw the DAX index in particular move up by 1.68%. If you recall from Thursday and Friday last week, the DAX was the biggest losers on those days. In fact, for the year, the DAX is down about 6.45%, I believe, on Friday for the year. But we got back a quick 1.68% in trading here today. The Dow Jones rose by 0.6%, and the Nasdaq was up by 0.97%. Finally, I wrote a piece today about employment. The Labor Department released their monthly changes by state in jobs. And this chart shows a net gain and jobs gained or lost since the beginning of the U.S. job recession in February 2008. What sticks out here is this big, huge tower right here. This is the Texas job gains since 2008. They dwarf any other jobs. The next highest being New York at around 230. This is about 1.1 million. So most of the job gains that we're seeing are in Texas. And what is that? What is that significance? Well, when Chairman Yellen speaks about the relative, how job gains aren't necessarily spread out across the board here, so to speak. This is another indication of that, where all the job gains are going into one state, and 33 out of 50 states are showing declines. That's a problem, and with the Jackson Hole Symposium coming up on Thursday, Friday, Saturday, and Yellen scheduled to speak on Friday, we got to be aware of that she is not as hawkish, maybe continues to be her dovish ways toward the employment report. You can read about this at our website again at GregMikeFX. You can put in your name right here, but everything is big in Texas is what you want to look for. Let's get into the currencies here. Take a look at some of our major currency pairs, see what the bias is. The euro versus US dollar traded above and below the 133.75 level for the, I think it's 9th out of 10th day now. That means that the that 133.75 level is the midpoint of the move up from the July 2013 low to the May 2014 high. And when the market trades around a key technical level like the 50% retracement on 9 of last trading days, that means that the market doesn't know which way it wants to go. And this is what it looks like on the hourly chart. Up, down, up, down, up, down, up, down. We tried to move above the topside trend line right here, and that failed. And today what did we do? We held that old trend line right here, and we moved down, and we moved back below the 75 level, back below the 200-hour moving average and the 100-hour moving average. That's a bearish, my friends. So we're going to be looking for lower levels in overnight trading. My stop is if the market moves above the 75 level. As long as the price remains below that level, the buyers or the sellers remain in control, and the buyers feel nervous. The pound versus U.S. dollar rallied higher again off those comments from Bank of England's Carney, and we have a gap up here around the 167 level, the 167.11 to fill. And we're finding resistance against this trend line and in the 38.2 to 50% retracement of this move to the downside. So because of the gap, because of this 38.2 to 50% retracement, and a little bit more, go back and fill it in, especially if the euro goes down. If the pound trades on its own and follows the advice of what Bank of England's Carney said and keeps the bullishness, you don't want to see the price move above, maybe even above this trend line or above the 50% retracement. Another thing you don't want to see is maybe come down to the 100-hour moving average and not be able to get back below that level and then move higher. Those are things that I'm going to be looking for. Admittedly, this is a little bit more bullish. We held on the downside, by the way, the 200-day moving average right here. Held on the downside of the 200-day moving average here. That was last week's trading. So that was down here. And we're back above the 100. So, I'm a little bit torn here, but I'm very cautious. If the market goes down, probably be a buyer here at 167. Let's just, fill the gap, get it over with, and then rotate to the upside, move higher, and have the euro sterling go to the downside. How about that? The dollar versus yen, this currency pair off the daily chart here, consolidating on a daily chart. This looks like that hourly chart, but it's on a daily chart. We move higher and we lower and higher and lower and higher and lower and higher and lower. And over the last 6, 7, 8 days, the market's been trading above the 100-day moving average, which is more bullish, and also above the 200-day moving average, which is more bullish. So our line in the sand, our stop, where we don't want to see the price move below is below this yellow area defined by the 100 and 200-day moving average. That would be right here, right there. You don't want to see the price move below this area as long as the price stays above that level and then starts to move above this trend line and get above here, and then we're going to move up to here, and then we're going to move up to there. That's what you're hoping for, but the market, when it gets caught in these little, can't move anywhere, then it's tough to move these things. But stay above the 200-day moving average, and perhaps we move higher in this currency pair. The dollar versus Swiss fell sharply on Friday, or fell down on Friday, fell below 38.2% retracement of this move up from the July 2014 low up to the high that we saw in August. August, yeah, this is the hourly chart. So that was July and August. So we fell below 38.2, but today we bounced back up, and where do we sit? Through most of the New York session, right in between the 200 and the 100-hour moving average, represented by the blue line. That's 100. This is a 200. And so the market has a decision to make. We went all the way to the downside. We came all the way back to the upside. Went back to where we start from whence we began. And what are we going to do? We're going to go higher. We're going to go lower. That's the big question. So watch the 100, watch the 200. Let the market decide for you. Or if you're long, that's where you stay long. Wait for the market to head through that. The dollar versus Canada. Difficult time on Friday. Much stronger employment report reported. That was after the error that they made in the calculation the prior week, and so 200,000 job gain ended up going up to 41,000 job gain. That sent the dollar Canada to the downside, the Canadian dollar higher, but we rebounded all the way back up and came right back up to the 100-hour moving average where the market held here. And we held it again here, and then the market came down. So today we went up, down, up, down, up, down. And what this and this did was make this more important, right? Makes sense, doesn't it? As long as the price remains below the 100-hour moving average, the bears remain in control. When the bears remain in control, the dollar gets weaker and the Canadian dollar gets stronger. The Canadian had the strong unemployment report, but so did the U.S. So you never know what's going to happen here. But we do know that we can define our risk against the 100-day moving average because it held here and it held here. Might as well use it again going forward, right? Right. Makes sense, doesn't it? The Aussie versus you, and I try to make sense, folks. I try to make sense. I want to be your voice, the voice in your head that is logical. Not like, oh, well, I think, or whatever. Just be logical. Look at what when you draw a trend line right there, and the trend line comes across on the 100-hour moving average, that makes that line more important. All right. So again, I'm just the voice of reason. That level should be more important, right? Right. Say right. And put a Fibonacci retracement and the 38.2 and the 53. This level is more important because the 200-hour moving average and the 50% retracement is right there. So that's important. But on the top side, we have a double top right here, and that makes that important as well. So we're in between here and here. I give the benefit of the doubt to the buyers here. We came up to this high right here, and the market found some sellers. Let's see if the market can push a little higher here. Plus, if you go to the daily chart and you see where the market bottomed a couple weeks ago, or not, maybe it was a week before. The market could not get below this level. We are pounding against the 100-day moving average, 93.40. See that level right there? We need to get above that level before we go below this level. We need to get above this level before we go below this level. We need to get above this level before we go below that level. Say it 10 times. And speaking of getting above these levels or staying above these levels, the 200-day moving average in the New Zealand versus U.S. dollar remains a key support level. On the downside, that level comes in at the 84.65 level. That's where the 200-day moving average here today. As long as the price remains above that level, then the next step is to get above the 85 to 85.15 level. Though that represents this yellow area. This yellow area is, if you go back in time, this is where the support fell through and uses resistance, uses support, fell through, it uses resistance, and uses resistance the other day as well. So we need to get below those levels if we're able to get above those levels. If we're able to get above those levels, look for stops or look for continued momentum, and we could start to move all the way back up to that 100-day moving average, and then the market's going to have a decision at that level. Put a Fibonacci retracement on this move to the downside, and that corresponds to around the 50% retracement, and that would be a tough level to get through. But I'll take the pips if it gives it to me, right? So anyway, that about does it. My name is Greg Michalowski. I wish you good fortune in your trading. If you like this video and you want to see more of me either now or in the future, you can go to my website there at GregMikeFX. Put your name and email address in there, and I will be in touch with you. Alternatively, you can also you can subscribe to this video or to my YouTube channel by clicking on this button right here. It says subscribe, and one of those two things, put your name in here, or both. Go and do that, and I'll be happy to follow you and make you happy. All right, my name is Greg Michalowski. Good fortune with your trading. Bye-bye now.